Hello and welcome to the Upside Fund feature. I'm Helen Pang. I'm here today with Madeleine Kaminski, an investment associate on the product research team here at Fidelity. She covers the Fidelity Global Natural Resources Fund, which is a very topical fund in today's markets. Welcome back, Maddie. Good to see you again.
Thanks for having me, Helen.
The strength of natural resources has been dominating headlines in recent months, especially during a time when geopolitical tensions are running high. In 2025, gold was the top performing asset class, hitting record highs. So it's a perfect time to be talking about Fidelity Global Natural Resources Fund. Can you walk us through the basics of this fund? Tell us all about it.
Absolutely. Managed by seasoned portfolio managers Darren and Lekkerkerker and Joe Overdevest, Fidelity Global Natural Resources Fund provides investors with diversified exposure to natural resource-focused equity securities across the globe. While both managers co-lead the strategy, Darren focuses on the materials side while Joe specializes in the fund's energy investments. Both managers follow a fundamental bottom-up approach focused on selecting high-quality opportunities for the portfolio. They manage the fund with a concentrated approach, with total holdings typically ranging between 40 and 60.
I am a bottom-up investor, so what that means for our listeners is I try to focus on owning the best companies as opposed to trying to predict or forecast economic variables or different markets, as I think that approach yields in higher returns over time.
As mentioned, natural resource equities have been a lucrative space for investment over the past year. Can you share the portfolio manager's recent outlook on the market?
That's correct, Helen. They have. Fidelity Global Natural Resources Fund has experienced strong absolute and relative performance in the beginning months of the year, delivering over 20% in absolute performance and over 2% in excess return to its benchmark in just the beginning 2 months of this year. Despite geopolitical tensions and volatility persisting through 2026, the managers hold a positive outlook on the current macroeconomic backdrop. They highlight the strength of the economy and positive environment for stock picking across the global natural resource complex.
Yeah, I am macro aware. I think the macro environment's supportive, right? I mean, I think the economy is stable and accelerating, and inflation tends to be coming down from elevated areas. There's a little bit of risk there as Q1 will probably be the peak tariff pass-through, but markets are forward-looking as to what the tariff rates are going forward. In terms of the overall market, I mean, look, like short rates are probably coming down, and you have double-digit earnings growth, right? Earnings growth is accelerated in the fourth quarter so far, 13% year over year. I think that's up from around 10, 11-ish% in the previous quarter. So it seems like a pretty nice backdrop for stock picking. And as I mentioned in my earlier point, I think there's higher dispersion that we're seeing now. So I think there's a better opportunity for stock picking and stock pickers to beat the index.
In the last 12 months or even 2 years, we're seeing how geopolitics are affecting many sectors. And I think, at least right now, Canada actually stands very high in terms of people trust Canada, and people trust not only for oil, but other resources or other goods as well. So that's great. And our standing relatively is actually probably going higher, not lower. And I think what happens as well is that when you look at Canada, we also have obviously a relationship with the US, but also we have a global market access. And I think that's really where we can develop. And when you look at let's like oil supply, OPEC's number one. Other suppliers in the world actually are the US. And that relationship maybe has been tarnished a little bit globally. So on the margin, your top two are kind of growth areas already kind of looking like, well, maybe we should look to Canada. And the other areas would be offshore, maybe Africa, which of course comes with some risk as well. And so to your point of almost like by just start knocking off some names, US stands out Canada stands out as something that we would be an offset to some of these. And really what we're looking for now is maybe in particular our governments as well to negotiate some of these things would be very beneficial for the country, because the resources there, the producers want to do it, we have the people to do it. It's really a matter of some maybe dotting the I's of some of these contracts.
What areas within natural resources are most compelling to the managers right now?
The managers highlight that the current macroeconomic environment reflects a complex interplay of supply, demand, and macroeconomic factors. On the materials side of the portfolio, Darren has found compelling investment opportunities within copper and gold equities. And within energy, Joe has found attractive opportunities within uranium and continues to be positive on opportunities across oil and gas.
I think just generally the demand drivers of US dollar diversification, elevated geopolitical risks, and countries around the world, monetary stimulus and like larger budget deficits of populist governments probably set to continue. So I think that demand will still be there for gold. It's gone up a lot recently, so it's hard to see what it does in the near term. But I think generally I still like it for copper. I think it's also a hard asset play. We mentioned earlier about stockpiling in the US, US government directly investing. So that seems quite bullish. The supply side is very bullish. There's been 4 large mines that are not producing due to political reasons or mine operations issues. The demand side could be a little better. 50% comes from China. That demand tends to be a little bit softer. But I think the price of copper is up a lot. It's above its fundamental price, I think, in my view. But at the same time, there's other bullish characteristics of it. And so I like it.
Darren and I, who are in global natural resources, and of course, anyone else, we look at resources here in team supply and demand. Yeah. So the tightest supply and demand would be gold and copper. We'll get into gold because it's not really a supply demand, but tightest commodities, or attractiveness, gold, copper would be up there. And then probably like oil would be next, and uranium. Uranium probably a little higher than oil right now, just because of short-term demand for it. The reason why we got here is still here, okay? And the reason we got here, again, I've been doing this for a while. Sometimes it's interest rates, sometimes US dollar. No, it's central banks. After Ukraine situation happened, central banks said, you know what? Maybe I shouldn't own so much US dollar treasury. And you're seeing a mix shift. Almost all the major central bankers on the margin are adding a little more gold and a little less US dollars, just a little bit on the margin. And that's a big buying power. We talk about ETFs. Trust me, central bankers will dwarf many other buyers in the market by a significant margin. Okay. And that continues, of like the central banks continuing to buy gold. And of course, now the kicker more recently is US dollar has been weak, been connected to, of course, interest rate cuts in the US, in particular by the Fed the last 12 months. Yep. So what's going on in gold? Yes, there's lots of volatility. Like, again, there'll be a Fed announcement, like with who's the new Fed leader.
And that's all for today's show. Please follow us on our socials, including Instagram, YouTube, LinkedIn, Facebook, and Reddit for more great content and the latest financial updates. You can also head to fidelity.ca's investor education section to check out our articles, sign up for the Upside newsletter, get information about upcoming live webcasts and on-demand videos. Whether you're learning investment basics or looking for more advanced knowledge, we can help you become a more informed investor. As always, working with a financial advisor is among the best investments you can make. Thanks for watching, and I hope you'll join us again on the Upside.
Thanks for listening to, or watching, Fidelity Canada's The Upside podcast. Subscribe on your podcast platform of choice so you don't miss an episode. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on LinkedIn, YouTube, Instagram, or X. We'll wrap things up today with a quick disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.